a realtor and talk show host all in one. Get tips, advice, and valuable lessons from the successful and rewarded Sotheby's Vice President, Jennifer Hammond. With more than 20 years of real estate experience, she'll make it look easy. Here is Jennifer Hammond.
I'm Jennifer Hammond, and I'm here with Linda DeMarlar from Tax Masters. That's in Rockville, Maryland, not in Texas, Tax Masters. But we're here talking about real estate and taxes and just kind of how you can really take advantage of all those wonderful tax benefits if you know the code. As I always say, you need to build an A team. It's really important that you have a team of advisors like Linda. You need to make sure you have an expert who can really help you with your specific situation. As we say, like a fingerprint, everybody's situation is a little bit different. So it's important that you understand the things that apply to you. So let's talk about medical deductions. What are different things that your medical expenses can turn into tax deductions for you?
Oh, this is a very good question because, of course, nobody really wants to have medical deductions. No. We'd rather not have to pay the doctors. We'd rather just stay healthy. But unfortunately, if you do have to pay doctors and medical and dental and things like that, there are certain thresholds that you have to reach in order to deduct them. This law, started in this year, says that you have to spend 10% of your adjusted gross income. Now that just means the bottom first page of your tax return. So let's say you have a married couple and they each make $70,000. So on the front page of their tax return, that would be $140,000. So unless they spend $14,000 on medical bills, they can't deduct anything.
Right.
So if they had $13,000, zero deduction.
Yeah.
If they had $15,000 in medical, they could only deduct one. So that's not so good. Now there's a way around that. There's a big loophole, but it's only available to self-employed people who hire their spouses, or a single person who wants to be a C corporation. So if you're self-employed, we can get you out of that one.
And it's important that the thing is a C corporation. Really important to know these different entities.
That's correct. We'll do another show on that one too. But let's just talk about an ordinary citizen, somebody who's not self-employed. And they have a lot of medical this year. And many times it's because they have a huge dental expense all at one time.
Right.
I just had a lady who's got twins and they're both getting orthodontia work, new braces. So she's going to qualify. Unfortunately, she'll qualify this year. So I've told her to try and pay all of it in 1 year.
Right.
So she'll reach the threshold. But that's sometimes hard to do. Now, there's many medical things that are deductible that people don't even think about. And this would include travel for medical purposes. So if you have a dentist or a doctor who's out of town, within reason, you can't just go to Palm Springs because you like the dentist out there.
But I like my dentist in Florida better.
In Florida better, yes, of course you do. Well, there's certain things, if you have a relationship, then you don't have to break it. So travel is deductible, that's number one. And also staying in a hotel up to $50 per night for medical reasons. And if you have to have somebody travel with you, a caregiver, then that could also be $50 a night. And then many times we have children of our clients who have some little disabilities or something and they're slow learning. They need extra teaching or extra care. Perhaps they even need to go to a private school that specializes in these things. So then that tuition or extra care, extra teaching would also be deductible. Also, you've probably seen the service dogs. You'll see more of them lately.
Right.
Yes. They call them comfort dogs or service dogs. Or even seeing eye dogs. If you need a pet, and it doesn't have to be a dog. I've had somebody who had a service pet, and it was a pot-bellied pig.
I know. I was going to say pot-bellied pigs or rabbits. I've seen rabbits be the comfort dog or comfort animal. A rabbit.
Yeah. So whatever it is that helps you, if your doctor prescribes it, then all of the costs, including veterinary bills and the cost of acquisition, buying the dog or the rabbit. Those things and the rabbit
or the
pellets,
pot-bellied pig.
Or the pot-bellied pig. Yeah, all of those costs can be deductions too. And also keep in mind that anything that's prescribed by a doctor, this could be condoms, birth control, Band-Aids, medical, you have an ACE bandage on your knee, sunscreen ointment, diaper rash ointment, anything prescribed by the doctor
Right.
for medical purposes. And of course, don't forget glasses and vision.
Yeah.
You know, glasses aren't cheap. So whatever it takes, you know, canes or walkers. When my mother was ill, we had a special thing in our bathroom for her to take a shower safely.
Right.
All of those pieces of equipment or supplies
Right.
also become deductions too.
So it's really important to make sure all the medical deductions, really, you get to take advantage of those. But now let's switch gears. What about charity deductions? Because a lot of times you give $20 here or $50 here. You might give it here and there, but you might not be keeping good track of it.
I know, and now they require that you do so. It's not like the old days where you could write down that you gave your church a certain amount or that you pledged whatever it was.
Right.
Now there's certain requirements. They really want you to get a receipt for everything.
So what about the under $70 for the receipt for business expenses?
Okay, there is a special rule. Very good
Okay.
you brought that up. Now, if it's a business expense, something connected with your business that helps you to make more money, then you don't have to have a receipt as long as it's $75 or less.
Okay.
That's called the Cohen rule, and that came into play because of George M. Cohen back in the 1920s or 30s. But that rule, unfortunately, will not apply to your charity.
Okay.
Because what's happened with charity is they've cracked down on it, and they really would like to see, and I guess you can't blame them, they want to see not only the checks that you've written, but if you actually give the charity more than $250 in any 1 year, they also want a statement from the charity acknowledging what you've given them also.
Okay.
So many times we have clients who they pledge $2,000 or $3,000 a year to their church, and at the end of the year the church gives them a lovely statement saying that, you know, they fulfilled their pledge. Maybe
Right.
it was done by cash or a check, it doesn't matter.
Right.
But we need to be able to prove that the church isn't just writing that letter. We need some checks. And also on the letter, it needs to say that not only did you give the money to the church, but that you didn't receive any benefit. So many times people send their children for baby care to the church or daycare, you
Right.
know, and so you're getting something back for this
Right.
money. It's not really just a donation.
Yeah.
So we need to say in the letter that not only did the client give the church $3,000, but that they received nothing back
Right.
especially if you donated something in a silent auction
Right, yeah.
or some other kind of a charitable thing.
Right.
Now, there's a really good thing that everybody needs to know about. I want you all to go home, and if you're at home, do it now. Clean out your attic, your basement, your garage, all the stuff that you have that you're not using, that you haven't used in the past 6 or 8 months, that somebody else could really use and somebody else needs. And if you will please, please donate it to charity. Do not leave it in your attic, basement, or garage. And the reason I say this is so many times I do taxes for my clients when their parents have passed away. And now my client who's in their 50s or 60s is going through all of their parents' things. And now my client gets a big tax deduction because they're donating all these clothings and items and household goods to the charity. And I'm thinking, it's a shame that the parents didn't take that deduction while they were still alive. Maybe the parents would have been in a higher tax bracket than my client.
Right.
So, and I've done this for myself when my parents passed away. So don't keep anything that you can give away as a tax deduction. You'll be helping people, you'll feel better about it, and you'll save money on your income taxes.
Well, one of the things, the example is, I know my brother teaches guitar lessons, and so often people have musical instruments around their house that they're just not utilizing, which again is such a shame not to utilize that wonderful instrument. But also, if you donated to somebody else, they would be able to utilize that, and you would get the tax write-off.
Absolutely, yes, and make sure that the charity to which you donate it gives you a nice receipt saying that you received nothing back, but you were giving them this, and then get a good fair market value. And a fair market value is just what a willing buyer would have paid a willing seller for that same item.
Yay! So we talked about medical expenses and about charity deductions. So both of which you want to make sure you never end up overlooking those. Again, that's so important that you look at your charity deductions as well as your medical expenses so that you can deduct everything that is qualified for you. So again, Linda DeMarlar, we're so excited. She's with Tax Masters in Rockville, Maryland. Thank you so much for being with us, Linda.
Thank you, Jennifer.
Such a pleasure. Again, I'm Jennifer Hammond, and we'll be back with more tips for you next time.
Thank you for listening to Jennifer Hammond's podcasts. If you liked what you heard, leave a comment or like on iTunes. For more information, visit her website at jenniferhrealty.com.